listen-only mode.
And welcome everybody to your live market update and charts of the day. I hope you're well. I hope your Thursday has started good. Mine did, even though it was at 4 a.m. When I was awake and watching my beloved football team. Anyway, back to things that are important and about markets. What we're going to do is the usual sort of format. We'll give you an important message, have a look at some headlines, and then we'll have a look at some charts and see what we can see. There may be just a little bit of there was a disruption on my platforms. I had to reinstall and all that sort of stuff. So I'm hoping that it's not too unsmooth compared to what is the norm. Anyway, we'll look it all out as we go. So let's pop up that important message for you to for us to talk to. Just remember that we are looking at live markets, and as a result, please do your own due diligence on anything you see here. Make sure you follow trading plans and make sure you manage risk on every trading action, entry and exit, of course. Consistent with your own personal trading objectives and financial situation. What's really important, of course, is that for those of you who have said hello back. So thanks to you all who have taken the time just to do that. It's always really appreciated. So hi to Hugh and Mark and Lita. Good morning, Brian. Hi, Sonia, and Neil. I hope you're all well today. Right, let's get into some headlines, shall we? Well, saw US equities pull back from the record highs with the second day of losses. There was a few contributing factors to this. I think maybe just a bit of risk off the table just because of everything that seems to be going on. Another day, another dollar, another 13 things that Trump has created headlines for. But anyway, the major one that came out last night, there was a memo came out from the White House which suggested that Trump was imposing tariffs of 25% on selected, is the right way to put it, selected semiconductors, but noted both AMD and Nvidia's new ones. Greenland is still bubbling around in the headlines. There was a meeting apparently between Denmark and the US, which didn't go exactly well. PPI came in as expected. So it's been a good week for inflation data, to be fair, and that's probably holding up markets. Obviously, we've got earnings coming across the wires, but things really ramp up next week. In terms of what this has done to markets, US futures are slightly soft in early Asian trade. Asian markets are mixed so far. When last I looked a few minutes ago, the ASX is up around about 0.4%, and European futures are pointing to a relatively cautious start later on today. US dollar index was really strong all last week, but it's at the beginning of this week, to be fair, but it seems to have paused. And gold is just continuing to move higher. We did see a pullback in commodities yesterday, so they were off their highs both in gold and on copper. So it was sort of interesting. Oil closed at 3-month highs on its fifth successive day of gains, which is interesting, and that's possibly because of the continuing narrative relating to potential US intervention in Iran. And Bitcoin also did well yesterday, breached resistance and hit 2-month highs, suggesting that sentiment may have changed, at least in the short term for right now. As I said, US earnings season will ramp up over the course of the next couple of weeks. We get some big boys reporting. The big tech start reporting, I think, on the 28th with Tesla and Microsoft. But as that gets closer, we'll talk more about those in some detail. We do have some significant data coming out today with US weekly jobs and manufacturing data. The Philly Fed manufacturing data is often seen as a precursor to the GDP. So those will be kept an eye on. Outside of the US, then we've got UK GDP and industrial production, also Eurozone industrial production numbers. But UK GDP is probably the key data point for the group. So that's where we are with the headlines, etc. So let's just put a little detail behind those. Let's check out what happened last night. You can see there just softness across the markets. The Dow was just below neutral, and the Russell actually managed to finish in positive territory. So it was big tech that got hit a little bit on the back of that. Semiconductor. So a little bit of sector rotation into small caps. Looks as though what has happened. We'll look at the futures. You can see there really quite a soft day after a positive day in risk-on assets. We're seeing a lot of that come off. You can see the US futures are down slightly. Although the European futures are up in Asian trading, remember the European market's close here, so there should be a slightly higher, actually, cautiously so, when they open this afternoon. You can see there's weakness in oil, gold, and copper, all coming off highs. That's quite a drop in oil this morning, down 2.75%. So a reversal of what we've seen over the last couple of days. FX markets are really quite flat. The exception is the Canadian dollar, which is down 0.13% versus the US. That's probably the major movement. Bitcoin's even giving some back as well this morning. So maybe a little bit of profit taken after not an unreasonable run in some asset classes. If we look at the data that's coming across the wires, there's last night's PPI, and you can see it sort of came in mixed, really. The headline PPI came in as expected, slightly higher than last month. The core PPI dropped to zero, essentially. Retail sales are slightly up, so mixed picture there. But that inflation data has been favourable, I would say, in terms of markets. I don't think it's shifted Fed opinion much. We'll have a look on that on Monday after the just settled on the weekend's action. But some good housing data coming out as well. Crude oil inventories saw a build, which is sort of contrary to oil having a good day yesterday. Normally, when there's a build, you would expect oil to drop off a little bit. When there's a drawdown, suggesting lack of supply, lack of demand, sort of reduce supply or increase demand, then we usually see it moving up a bit, but it didn't. Anyway, there's that GDP number coming up from the UK this afternoon, expected to move back into positive territory. Soft numbers probably going to be pretty poor for the GB pound. Trade balance numbers coming out of the Eurozone. Yeah, I'm not sure that's going to ripple markets very much. And then we move into this evening, so we've got weekly jobs expected to, or the unemployment claims expected to tick up slightly. We've got the Philly Fed and the Empire State Manufacturing Index, respectively, both of which are expected to be better than last month's read. Lots of Fed members speaking this week. Moving to tomorrow, there's very little to already note. Even after the USD, or even after the US, there's only really industrial production that looks as though it might be interest to markets at all. Let's just check out the markets. What we're doing now, you can see the ASX is positive. Greenland, every headline. You can see the Nikkei soft in early trading in Shanghai and on the Hang Seng. We're both negative as well. So really, the ASX has outperformed. It's the only major Asian index to the upside. I'll have a little closer. It's actually sort of gaining a bit of steam. Resources pulling things up. Three main sectors up: resources, healthcare, and discretionary. So it's interesting. I'm wondering whether we may see a drop-off in this as the day progresses if we keep on seeing selling commodities, but we'll check that out as we go along through the day, of course. Right, let's have a look at some charts, shall we? Let's start with copper because copper is really quite interesting this morning. So let's put it on the daily chart first of all, and you can see there yet another new high. But then we get a pullback, and this seems to have happened every time we hit a high. We got a retracement there, got a retracement after that new high, then a retracement after this new high. So are we going to get a continuation of this higher lows, sort of record highs followed by retracement, but forming a higher low and then a bounce up again? So difficult one to play that. But I thought it was an interesting chart. While we're on the commodity scene, let's have a look at gold. There's that record close. Did come off its high a little bit. But you can see there that's soft as well, challenging that 4,600 level, which may prove to be an important psychological level. You can just see it's looking less there's less conviction in terms of the buying into gold at the moment, which may mean it might pause around this nice round number as things often do. But if the US dollar here continues to pause, maybe we get a continuation of that move up in gold. But you can see there was the last couple of weeks. But this week we've sort of, we're near the highs of the week, but it's really been caught in quite a tight range. It looks a little bit uncertain. That's despite inflation data. As I said, we'll get I'll do an update on Monday if you're around on both the early earnings reads and also we'll see what happens over the weekend with some of the geopolitical stuff. Right, let's just have a look at the major US indices. It would be a miss not to do so. You can see there's the US 500, just those couple of days successive falls, but really not significant. And context is always really important in this. We're still, there's the previous higher low. Be interesting. We had a new higher low there on this couple of days retracement. So we did test that, but we sort of bounced a little bit. If we look at the hourly chart, you can just see that. We sort of sold off for most of the day, and it wasn't until the back end of the session that we saw a little rally. Perhaps that's profit taken on those that had gone short during the course of the day. So interesting moves on that. None of it particularly compelling for right now. As for oil, as I said, we had a close here that we've not seen. Really, we've got to go all the way back to October to see at this level. But you can see there a reversal tight candle going on the daily chart, and you can see the selling this morning. This could be an important level at around about 60.26. 60.25, somewhere around that. You can see how it was an important level going upwards and created a support there. That is being honored at the moment, but being tested in trading right now. A breach of this may see it drop to around about 59.70, so not significant. But that drop towards the back end of the session looks significant. As I said, we've had 1, 2, 3, 4, 5 days, 6 days, 6 days moving to the upside. So we are about due a retracement. We're only at about 15 to 20% at the moment. Let's have a look at some individual. Oh, we haven't looked at how to look at Bitcoin. Let's just coin chart, because this is interesting as well. Though it is coming off a little bit today, you can see the importance of that level. Let's just get rid of some of these lines. You can see the importance of that level there at 94,500, 425. It tested that several times, really since early November when it moved or began this range. So with the fact that we've broken out that range with such gusto yesterday suggests the buyers are in. Possible profit taken on 2 really strong days in early Asian action today. It actually looks like a double top. So one wonders whether we might be tipping over. If we do tip over, possibly a move down to around about 95,750 is the next level to look at. But if we do see buying coming in, then 100,000 is in the crosshairs. just put that in the right place. Just move that a little bit where it should be. You can see that is almost bang smack on 100,000. So that's the next market target to the upside. But as I said, if this is an unconvincing move, which at this stage, that's quite a healthy candle, we could see at least a retest of 24,425 before testing that, if the risk appetite is not there. Let's check out a few crosses. You can see there that the US yen is under a little bit of pressure to the downside in trading today. Now, just context is always important. Not quite a pipe formation, but looks interesting. It does look like a potential reversal is on the cards, but the key level here is 158. You can see how that was a key level to the upside through the 8th to the 12th, really. Took several attempts to actually breach it. When it did, it went very well. But it looks as though that level maybe we'll have a retest. A breach of 158 could be technically interesting, take us down to 157.71. But equally, of course, we are in a range, so we might do exactly what happened when last time we hit the level and bounce back up towards 158.60. So this is worth keeping an eye on, possibly for the next 3 or 4 candles or so, to see what happens around this key level. If we look at the Aussie yen, again, you can see that Aussie weakness throughout yesterday, giving away gains that we saw in the early part of the week. I would say the interesting technical level here is probably around about this 105.60. It was resistance here, a little bit of a retest before we went to the upside. That was the bounce level from the last low point, from last swing low it hit. So are we going to test that again? Looks as though we could, but at this stage, it's an uncompelling story. But that level again, much like the US yen, is worth keeping an eye on. Let's have a look outside. Let's just possibly. Wondering whether that's not whether the US aren't the best ones to go and have a look at. Let's just maybe pop on. Sorry, there we go. The euro yen, I did note. Sorry, the euro USD, I did notice this morning is trading at an interesting level. If I put a line there at 116.36, you can see tested here, tested here, tested here. So essentially was yesterday's low and the low of the previous day. So I'm just going to move that down a little bit to the bottom of that wick, just take it out a little bit. So you can see the significance of that. Lots of price consolidation around it here as well. On a daily chart, for context, it is in a range. That we've been in really since October. So we're mid-range at the moment, around this key level. So a breach could see us move back towards the 200 MA. But it is potentially a bounce level again. It's one of those levels which is almost, it could go either way. If you were interested, to answer your question, if you look at an upside trade, you probably wouldn't get excited about this or even consider it for unless it broke 116.66, and even then you can see all this noise here. So not a compelling technical chart if you look at it anatomically. Let me just look at the symbols as well. Let's look at the euro Aussie. See if that's given any more. Daily chart, we've got to bounce off a level here, but really seen. Look, even though we've got these higher lows, we have tested this level at 174.26 for the last 1, 2, 3, 4, 5, 6 candles. So it looks like a level of real interest. But if we take it down to the shorter time frame, gives us that little bit extra detail, and would probably suggest that this is a 174.51 is possibly a level just to keep an eye on. It's more compelling than any other chart we've looked at, although it's still got a way to go before you would sort of be interested. But if we do get a breach of 174.51 with some buying pressure, some increased volume, all the usual stuff that you would look at, this may be setting up for a move back up towards 175. But equally, of course, again, it's called resistance for a reason. We could see it stay in this range. So it's one, as always, if it fits your trading plan, to be patient with until it's actually done what your plan says. GB pound could be a retest of 212. Let's just have a look at GB pound here. Yeah, absolutely, I absolutely agree, Joe. I think that's a good call. So Joe's pointed out that so we had that double top. We've got a continuation or follow through on that. So it's a fully formed one with the breach to the downside of the confirmation point. Could be making its way down from 212.63 down to test 212. A call from Joe. If we look at the hourly chart just for a bit more detail, you can see there's really short-term support in place. Technically around about 212.55. Actually, I quite like that. So there's two charts to keep an eye on from an FX point of view. There's Euro Aussie, and GB pound yen. Good call, thank you, Joe. Right, okay, so let's check out some stock. Right. Why am I not getting? RFX coming back on here. RASX, sorry. Where is it? Oh, maybe I didn't upload everything. I'm not looking at the right one, am I? Right, okay, here we go. There we go. Pitching. So let's see what we've got to play with. As I said, a lot of the resource stocks haven't been pulling back, but if we look at PLS as an example, still looks really, really strong. That's certainly one worth keeping an eye on. You can see there we've had a few bars where we've tested that level, so it's an interesting one for sure. Let's just flip back. IGO lithium stock still looking really strong. IGO continues to pile upwards. We've sort of identified these a couple of times as worth a watch. I look at the same. LYC the same. Let's have a look at LYC chart. This is coming up to a key level. Long-term double bottom. At $16 is the key level. If we can hold over that, then that would represent a close. If we can hold where we are now, it'd be closing high not seen since late November. I would suggest that a move up back towards this gap that was created. Around about 1784 is on the cards. I'm just going to remind me to have a look at REMX as well, just on the US market. Be interested to see how that ETF is traveling at this stage. Outside of the material sector, which is holding up very well on the back of lithium, uranium, all looking good. Iron ore looking good. If we look at CIA as well, that looks as though it's going to retest previous highs. And resources, another one. Let's see if there's anything outside of that. Good, doing well. James Hardy in the building sector at a really interesting point as well. Sat underneath the 200 MA. as it has done for the last few sessions. And you can see also it's a double whammy here in terms of moving high. You've got that resistance at around about $35, and the moving average, which is sitting at 200-day moving average, sitting at 35.40. Worth keeping on your radar. Not likely to show anything today. We'll look at that gap that could be filled. Technically, you could suggest that 39.64 might be an area of interest. Should we move higher? Let me just Fisher Paykel, let's have a look. Yeah, they're challenging. I don't like this chart. They are challenging a resistance, but the upside on this is really quite limited. So remember proximity. We talked at length on Inner Circle last night about the importance of proximity. And Domino Pizza is one that we've featured before. This once again is looking interesting, breaching that sort of $23 this week, but really seems stuck around that. Remember, again, last night I talked about overlapping candles been a potential sort of issue. We're seeing that there. Could we have seen this it's just run out a bit of steam and pop back into this range here with the 200 MA as support? Is it done for now? It's popping on a weekly chart. Just see the importance of this level again. We could sort of see it move up, possibly to test 25 should we breach. So of all of these, it looks like materials are really sort of rocking and rolling. And as I said, the scanners are proving their usefulness for right now. No, DYL stuck. So I'm not mirroring Paladins. Move up FMG. FMG really interesting. So you can see there, I'm going to make FMG my chart of the day. Now taken off the line chart. Just want to make sure I've got all the candles there. Right. So I've taken it off the line chart. Sorry, taking it off the candles chart, so you can just see the closing prices. And you can see that this is a retest. This is the third test of say $23. We had one here. We had one here. We're having our third attempt here. All of the time associated with higher lows, which suggests the uptrend is still very much intact. So that latest retracement was higher than the previous one, so that's important. The question is, of course, have we got enough buying pressure to come through this level at 23? So I'll keep that on your radar. Just keep an eye on that. But as is always the case, patience is good. And it needs to follow you, and you need to follow your plan in terms of whether it's a fit for you or not. Because as always, this stage is still in the range. You're just looking at whether we can break out of it. So there's a fairly equal chance it could, particularly in light of today's price action, that it could sort of drift that mid-range. So just be cautious and be patient and make sure it follows plan. In the US, as I said, I did want to check out RMS. Just to see if that's benefiting from big moves we're seeing locally. And it is. So there we go. This is one we've featured a few times. So with that buying, we breached that $80 level, and we just continue to move higher. If we put this in context and look at the longer term picture, we've even breached the next level of interest, which was at 86.81. We're going to go back a very long time before we hit, back all the way back to, what's that, mid-2023? Yeah, mid-July 2023. So it's breached that. So last time it closed at this level was back here. So the week was back in November 2022. So in excess of 3 years highs on this, and you can sort of see the next level is not surprisingly around the interesting $100 level. So that's certainly of interest. Where's all my US stocks? If we look at Tesla, Tesla's pulled back a little bit. Isn't having a very good week. It does look range bound in the short term. You can see there between 430 and 455 is the current range. You might even sneak that up a little bit to 460. Whichever way you slice it, of course, these are due earnings in 13 days' time. So maybe the market will trade sideways until then. Most of the semiconductors looking a little shy as well. RMX is our leading US performer that we've got on here. Walmart, I don't know where all my stocks have gone, but anyway. I'm not that enthused about Nvidia, to be honest. Also put Delta Airlines on this. Nvidia down 1.6% in after hours trading on the back of that news out of the US. LUV were another one we're tracking. Delta Airlines down as well. Did well last night. Let's just scoot back over here and have a look. If you use FinViz at all, the maps is sometimes a really interesting thing. So we can look here. Consumer defensive did well. All doing well on the back of oil prices moving higher. IBM got an upgrade from, give them an upgrade. They are expected to do quite well. Let's look at INTC. So how are Intel going? Looking very strong. Let me just check in terms of have they reported yet? They usually report very early. %3 yesterday. Upgrade again. I missed upgrade again. So yeah, I think the earnings day is probably going to impair that. 22nd of the 1st next week. Yeah, usually one of the first tech stocks to report. The US is really difficult at the moment because we've only just started earnings season. So I would maybe just be cautious, see what shape the world is tomorrow with the US. Anyway, thank you very much, Lee, for popping in today. It's been a pleasure and privilege to see you here. Thank you very much for thank you very much for being here as always. If I don't see you in the session before the weekend, you have a wonderful one. And of course, take care of yourself, trade safe. And we shall see you again soon. And Monday, in fact. So enjoy the rest of your day. And thank you once again. Catch you later. And cheers, Lisa. You're always welcome. Bye-bye for now.